Buying your first home in Canada can be overwhelming. Mortgages, down payments, lawyers, inspections, it feels like a maze. So in today's video, we are cutting through all the noise. In the next few minutes, you're going to know exactly what you need to do to buy your first home in Canada the right way. We'll cover money, mortgages, the process, and mistakes to avoid to set yourself up for success in the long term. Let's dive in. The very first thing that you need to do is get your finances organized. Here's what that means. Credit score. Aim for 680 or higher if you want the best rates. The absolute minimum your credit score can be is 600 if you're buying a mortgage with default insurance. Down payment. For homes up to $500,000, you need at least 5%. Between $500,000 and $1 million, it's 5% on the first $500,000 and 10% on the rest. Between $500,000 and $1.5 million, it's 5% on the first $500,000 and 10% on the rest. Over $1.5 million, you need a 20% down payment. Closing costs. Budget about 1 to 2% of the purchase price for things like land title transfer tax, legal fees, and adjustments. And here's a pro tip. Don't drain every dollar for your down payment. Keep at least 2 to 3 months of expenses in reserves as well. You're going to thank yourself later. Next step is the mortgage pre-approval. Do not just punch numbers into an online calculator. Get a written pre-approval form from a mortgage broker or trusted mortgage specialist from a bank. This does two things. It can help you lock in a rate for 90 to 120 days and tells you what you actually qualify for. Another pro tip, work with a mortgage broker, not just your bank. Brokers shop multiple lenders for you to find the best rate and policies that suit your situation best. Now, here's where a lot of people get surprised. The stress test. You have to qualify at the greater of 5.25% or your contract rate plus 2%. So even if you're offered a, say, 4.5% rate, you have to prove that you can afford the mortgage at 6.5%. And one more tip, once you're pre-approved, do not go buy a new car or load up your credit cards. Lenders sometimes check before closing. As a first-time home buyer, you have access to some programs that can absolutely help you buy that first home. The Home Buyer's Plan. This lets you withdraw up to $60,000 per person from your RRSPs tax-free to use for the down payment. The First Home Savings Account, brand new, is huge. You can save up to $8,000 per year tax-free and combine it with your RRSP and TFSA. And in provinces like Ontario, BC, and PEI, you can get land transfer tax rebates. That's real money back in your pocket. Buying a home is a team sport. Here's who you need on your side. A realtor, someone who knows your market and has worked with first-time home buyers. A mortgage broker or banker to help you structure your financing properly. A lawyer or notary, they handle the paperwork, title search, and closing. And a home inspector, especially important if you are buying a resale property or even a new build. Sometimes a home inspector can save you tens of thousands of dollars in finding issues with the home that were not apparent on the first walkthrough. And here's my advice. Don't just go with the first name that you hear. For all of these professionals, don't hesitate to interview them. Ask them how many times they've dealt with first-time home buyers. A good team will save you money and stress. Now comes the fun part, house hunting. Focus on location, budget, and condition. Don't get distracted by granite countertops if the furnace is on its last legs. Understand the type of market that you're in. Is it a buyer's market with lots of inventory or a seller's market where you need to be really competitive on your offer? And think resale. Even if this isn't your forever home, buy something others will want in 5 or 10 years. Chatting quickly about location, think schools, transit, and the layout of the home matters more than the fancy finishes. When you are ready to make an offer, here's what to expect. Your deposit is usually about 1 to 5% of the purchase price, due shortly after the acceptance. You're going to want to include conditions of financing, inspection, and if it's a condo, a review of the condo documents. This is where you're really going to rely on your realtor to help you input the conditions that are best suited to your particular situation. And don't forget that price isn't the only thing that wins offers. Closing date conditions and flexibility matter too. One more thing, do not waive your financing condition unless your lender or broker are 100% sure you're solid. It is not worth the risk. Once your offer is accepted, the clock starts. You finalize financing with your lender, provide any extra documents, and work with your lawyer or notary. Your lawyer will do a title search, prepare adjustments, and handle the transfer of funds. A few days before closing, you'll do a final walkthrough of the property. Then on closing day, you sign the paperwork, the money transfers, and you get the keys. Here's a pro tip. Always have a little extra cash set aside. Sometimes lenders make last-minute adjustments and you do not want to be scrambling. Let's talk mistakes, because avoiding these can save you thousands of dollars. Do not overstretch your budget and end up house poor. Don't forget closing costs. Don't change jobs before closing. If you change jobs either during the process or near the end, make sure to consult with the lender to make sure this is not going to cause your financing to be canceled. Don't skip an inspection to save $500. Again, that decision can cost you tens of thousands of dollars later and can maybe even save you money during the process if you're able to negotiate with the seller. And whatever you do, do not finance new furniture or a truck before your mortgage funds. Lenders might see it and it can blow up your entire deal. Finally, remember, this is your first home and it can be a stepping stone. Treat it as part of your long-term wealth plan. When your mortgage comes up for renewal, shop around. Don't just sign the first renewal letter that your bank sends. If you can, make prepayments to chip away at the mortgage faster, but don't do it at the expense of your emergency fund. And always think big picture. Owning a home is one part of your financial future, not the whole plan. All right, that is a quick full roadmap for buying your first home in Canada. We covered everything from getting your financing in order to mortgages to the offer process, right through to getting your keys. If this helped you out, hit the subscribe button and drop your questions in the comments. Good luck on your home buying journey. I'll see you in the next video. If you did need help on the financing side, click in the description of this video. And if you enjoyed this video, you're gonna love this one as well.